Hi everyone, in this video I'm going to answer the question if Adobe stock is a buy. I'm going to use my simplified 6-step framework, so let's get right into it. The first step in my framework looks at the customer value, and one way to measure that is looking at revenue growth. For Adobe, that's been from 4.4 billion in 2012 to 15.8 billion in 2021, nearly quadrupling over that time. And it sells a diversified portfolio of creative software products, including cloud-based subscriptions. And another thing I look at is the Net Promoter Score, and Adobe has a -10 Net Promoter Score. If we look at the scale here, what's a good NPS score? Adobe needs improvement here at -10. The next step in my framework looks at unit economics, and Adobe is a software as a service firm, and these are characterized by high gross profit margins when they reach large scale, and Adobe has certainly reached that scale. Its gross profit margin averaged a whopping 86% in the last decade. Meanwhile, its operating profit margin expanded from 26.7% to 36.8%. So excellent profit margins for Adobe. The next step in my framework looks at the total addressable market, and according to management, Adobe's management, its total addressable market will expand to 147 billion by 2023. The next step in my framework looks at competition, and Adobe's facing several newcomers in entering the industry with lower priced and more user-friendly options. These are geared towards more beginner users, while Adobe dominates arguably the market for professional users, higher end users. In fact, I tried to use Adobe's offerings, but their services were a lot more advanced than I was able to use. So I ended up using a more user-friendly, lower priced option instead of Adobe after trying the Adobe Creative Cloud. The next step in my framework looks at valuation, and I was able to use the price to earnings and price to free cash flow because Adobe has a long history of being profitable and positive free cash flow. And looking at the price to earnings of 33, it's the lowest it has been going all the way back before 2014. Similarly, the price to free cash flow at 22 is the lowest it's been going all the way back before 2014. So the stock is inexpensive both relatively and absolutely. And the final step in my framework looks at risks. And the main thing here is, did Adobe overpay for the Figma acquisition? Of course, in late 22, it paid $20 billion to acquire Figma, and this was a company with annual recurring revenue of just 400 million. So it paid close to 50 times sales for this company, a rich valuation to pay. And so there is risk that this was wasted money that will end up having Adobe report write downs and losses later on down the road. And then the second risk I note here is that digesting acquisitions of this size are rarely an easy task. You've got technologies, you've got people, you've got to onboard all of that stuff. It's not an easy thing to do. All right, now that I've looked at every step in my framework, let me give it a grade. Adobe gets a B- in customer value. Even though excellent revenue growth on the top line, the NPS score needed improvement. Unit economics, it got an A+. Remember the excellent profit margins. Total addressable market, it got a B-. A TAM of 150 billion is not very large in the grand scheme of things. Competition gets a B. These new offerings coming into the market at lower priced, more user friendly, could take a big chunk of those beginner users from Adobe. That's not a good sign for investors. Risks, they get a B here. The premium valuation for the acquisition could mean that billions of dollars were wasted. and write-downs could come later on, as well as elevated expenses in the near foreseeable future. And then finally, valuation, they got a A minus. The stock is relatively inexpensive going back all the way to 2013. Okay, so now that I've looked at each step in my framework and given Adobe a grade, on the next slide, I'm going to answer if Adobe stock is a buy right now. Yes, Adobe stock is a buy right now. The relatively inexpensive valuations coupled with the absolutely excellent profit margins and top line revenue growth sways me to recommend this stock as a buy right now. All right, so that's all I've got for this video. Thank you for watching, and I will see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.